Welcome back to my channel. Let's talk about it. The crypto market is on fire right now. And not in a good way. November has kicked off with this absolutely brutal market-wide sell-off, and it's testing the conviction of, well, just about everyone. It really has us all asking one critical question. Are we watching the start of a deep, prolonged crash? Or is this just a violent shakeout right before the next explosive move up? We're going to unpack all of it. To put it in perspective, in just one 24-hour window, over $100 million in high-risk leverage positions were completely liquidated. Just gone. Poof. This wasn't just a little dip. This was a massive deleveraging event. And it's a pretty stark reminder of just how fast the tide can turn in this space. And that brings us to the big question, right? The one that's at the heart of this whole thing. Are we watching a total meltdown in real time? Or is this just the market doing what the market does best? Shaking out the weak hands, getting a little healthier before its next big run. Is this a massive red flag? Or just maybe, is this a golden opportunity staring us right in the face? All right, so here's how we're going to break it all down today. First, we'll look at the damage in the November nosedive. Then, we're going to play detective and uncover the 4 drivers of the dip. After that, we'll flip the script and see why the bull case awakens before using Ethereum as a perfect case study. And finally, we'll bring it all home in the great tug of war. Okay, let's jump right in. Part 1, the November nosedive. Before we can figure out what's coming, we have to get a handle on what's happening right now. And yeah, it's a sea of red out there. A serious cool down after that last rally that has a lot of people on edge. So, let's get past the gut feelings and look at the cold, hard numbers. And when you dig into the specifics, wow, it's not just a dip. For some of these assets, it is a real bloodbath. You've got Bitcoin down almost 3%, and it's really struggling to hold that critical 108K support level. Ethereum's getting hit even harder, down a painful 4.5%. And then you see the ripple effect, right? Look at BitMine, a project that holds a ton of ETH in its treasury. It is getting absolutely hammered, down over 5% specifically because of that exposure. This isn't isolated. It's a serious broad-based sell-off. So that's the what. Now let's get to the important part, the why. Part 2 is all about the 4 main drivers of this dip. It's never just one thing that causes this kind of pain in the market. We've pinpointed 4 key forces that are really pushing everything down right now. So let's break them down one by one. So you can think of these as 4 powerful currents that are all pulling the market in the same direction, down. First, we've got the big storm clouds gathering on the global economic horizon. Then, we'll see who's cashing out from inside the crypto world itself. After that, we'll look at the technicals of what makes this a thin and dangerous market. And finally, we'll tackle the most powerful driver of them all, simple old-fashioned fear. So, first up, the big picture. The macro environment has gotten pretty chilly for anything considered a risk asset, and that definitely includes crypto. Just when we were all getting optimistic, the Fed came out and basically said no more rate cuts this year, kind of pulling the punch ball away from the party. At the same time, Treasury yields are rocketing towards 7%, which makes super safe government bonds look, well, really attractive all of a sudden. Throw in some rising US-China trade tensions, and what do you get? A classic flight to what people see as safety, like big tech stocks. But it's not just outside forces. A whole lot of the selling pressure is coming from inside the house. Long-term players are deciding it's finally time to take some profits off the table. And the data here is crystal clear. Long-term Bitcoin holders sold a staggering 400,000 coins just in October. We're seeing these old giant whale wallets that have been dormant for years suddenly wake up and move coins to exchanges, which is a classic signal that they're getting ready to sell. Even the so-called smart money is feeling it with big institutional funds, and even the ETFs seeing some pretty significant outflows. Okay, our third driver is a little more technical, but it's absolutely crucial for understanding the market right now. We're talking about the Relative Strength Index, or RSI. The slide says it's a momentum indicator, but I want you to think of it like the tachometer on a car's engine. It tells you how fast the engine is revving. On a scale of 0 to 100, if it's revving too high, we call it overbought. But if it drops below 30, like we see here, it's considered oversold, which means the selling might be running out of gas and the asset could be due for a bounce. And this chart just illustrates the situation perfectly. This is what we mean by a thin market where it doesn't take much to cause these huge price swings. Take a look. You can see Bitcoin is getting close to that oversold territory. But now look at Ethereum. Whoa, its RSI has plunged all the way down to 24.3. That's what we call deeply oversold. It tells us that the selling pressure on ETH might be getting seriously overextended, which paradoxically could be setting the stage for a really sharp reversal if buyers step in. And that leads us right into driver number 4, pure psychology. After a sharp drop, like we've seen, you could just feel the fear in the air, right? The uncertainty, the doubt. It's palpable and it weighs on everybody's decisions. But this is exactly where you have to take a deep breath, zoom out, and get some much-needed perspective. And what a contrast this is. In the short term, yeah, there's pain. You can see it in the minor outflows from Bitcoin ETFs over the last week. That's the fear talking. But now look at the long-term picture. A staggering $61 billion have flooded into these things since they launched, buying up almost 7% of all Bitcoin in existence. So you have to ask yourself, is this recent panic just a little blip on the radar? Or is it just a drop in the ocean of a much, much bigger trend that's really just getting started? And that's the perfect leading to part 3, the bull case awakens. Because here's the crazy thing. For all the red we're seeing on the charts, there's an incredibly powerful bull case that's been quietly building in the background. So let's totally flip the script and look at the massive catalysts on the horizon that could completely change this narrative. So this timeline is basically your guide to potential fireworks over the next month or so. You got Ethereum's massive FATCA upgrade coming. We have crucial inflation data about to be released. Then, the end of the U.S. government shutdown could unleash a tidal wave of cash. And finally, the Federal Reserve is set to end its quantitative tightening program, a huge potential turning point for all markets. Let's just focus on that government shutdown for a second, because the scale here is just mind-boggling. When it ends, it's expected to unlock over $1 trillion from the Treasury's account, injecting it straight back into the banking system. I mean, that is a massive wave of liquidity that has to find a home somewhere. And historically, that kind of cash injection has been pure rocket fuel for riskier assets like tech stocks and, of course, crypto. You know, the end of a shutdown could also clear the way for something called the Clarity Act. And this isn't just another bill. This could finally give the industry the clear rules of the road it's been begging for. We're talking about formally defining what digital assets are, potentially allowing major banks to legally hold crypto for their clients, which would unlock the floodgates for a whole new wave of institutional money. This would be a genuine game changer. All right, so let's move to part 4 and see how this all comes together. We're going to bring all this big picture theory right back down to earth and look at a single chart. Because right now, the Ethereum chart is the perfect case study, a perfect snapshot of this immense tension we're seeing between the bears and the bulls. On one side, you have some really compelling bullish signals. You can see how the price is coiling up tighter and tighter into this classic triangle pattern, just building up pressure for a big breakout move. We already know the RSI is deeply oversold, and crucially, it's holding on to this long-term support line. But the risks are just as real. It's trading below key moving averages, which is a bearish sign. And it was just rejected hard from that big psychological $4,000 level. So it all comes down to this one number, $3,584. That is the absolute line in the sand. It's that critical support level we were just looking at. If Ethereum can hold this level, the bulls are still in control. But if it breaks, well, look out below. You could argue the fate of the entire market in the short term hangs on this single price point. Okay, so let's pull all these threads together in our final section, part 5, the great tug of war. After looking at all this, what's the verdict? Is this a dip you should be buying? Is it a setup for an even bigger fall? Or is this just a whole lot of noise before the next big run? Here's the bottom line. The entire market is caught in this massive tug of war between the fear from the macro environment and that huge wave of liquidity that's about to hit. Ethereum is like a coiled spring, just ready to pop one way or the other. And here's the fascinating part. While short-term holders are clearly panic selling, the on-chain data shows that the long-term players are quietly buying up the supply on this dip. And let's not forget that historically November is one of crypto's strongest months. So this isn't just a simple dip. It feels like a true inflection point. All the evidence, all the tension in the charts, it all points to one thing. A huge decisive move is coming, and probably soon. The only question left is the one you see right there. Which way is it going to break? And the answer to that will likely be decided by those key catalysts we talked about, which are all set to play out in the coming weeks. Don't forget to subscribe, and thanks for watching.